I'm not saying that de-dollarization couldn't happen. I just think that everybody tries to take one random data point and conflate it all together. The US is poorly positioned versus Europe or China. What is the canonical flight to safety? If it's not a commodity like gold, it's probably the dollar until it's not.
In his most recent podcast, Chamath Palihapitiya shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
It's not even the dollar standard, right? Like what this deal was is to use this thing called SIPS, and SIPS is the non-dollar competitor to SWIFT. And so you settle, right, across, let's just say you have two trading partners in two completely different countries that use a bank in each of their local areas. They typically swap to dollars and then they transfer, right, using this backbone of the financial infrastructure called SWIFT. China has built a competitor to it called CIPS, C-I-P-S, and China's been going around and signing folks up. Makes a ton of sense, right? Hey, listen, if we're trading between each other, let's just use that. So I think it's important to not paint this with more of a brush than it should be. I'm not saying that de-dollarization couldn't happen. I just think that everybody tries to take one random data point and conflate it all together to reinforce a Ray Dalio point from a book 3 years ago. This is also where you have to expect the Fed will really want inflation to stay high. That's sort of what we said before. The only way out of this mathematically is to keep rates high. But the other thing, David, that when you mention all of this is, what about every other country? If you think that's happening in the United States, I think it's important to make sure we at least consider every other major economy, because it's not as if they're pristinely sitting on the sidelines while this happens to the US. This is my whole argument the whole time, which is if you're going to have this argument, you need to do it thoughtfully and relatively, right? Because the euro is in the same amount of trouble. If you look across, it's not as if China is actually sitting pretty and smelling like roses either. Every major economy or trading bloc in the world is going to go through this at the same time. So it becomes a relative trade argument. And there, I just don't know enough to know whether the US is poorly positioned versus Europe or China. But it just seems like you get back to a place where it's like, okay, we need to find the flight to safety. What is the canonical flight to safety? If it's not a commodity like gold, it's probably the dollar until it's not. People that are interested in this topic, I would go use the Wayback Machine and go and read all of the articles in the 80s where you could replace China with Japan. And what happened with Japan is that Japan just hit a demographic wall, not dissimilar to what China's about to hit in the next 15 or 20 years. I agree with you about the importance of these unfunded liabilities. I just completely disagree with you that this argument about these things being so hyper-connected, or that all of a sudden we're at the cliff of de-dollarization, I don't think it's rooted in facts. And I think, again, it ignores this unbelievably important piece of logic that all of you guys that say this tend to ignore. And it's still, and it's not even well addressed in Dalio's book, which is, it is a pegged currency. And the minute you unpeg it, none of you know what happens to it, except that it probably isn't where it's trading today. And if you actually then have to factor in dollar reserves that everybody holds, that thing would skyrocket in value and it would crush the export value of the yuan. And it happens to all currencies. And this is this funny thing that has happened to the United States, which is that it ran forward and it transitioned its economy to a service-led economy faster than other countries and other economies and other currencies did. When Soros broke the back of the US dollar, what he forced George Brown, or what he forced the Chancellor of the Exchequer to do, was to basically depeg the pound. And then, yes, you're right, it's been like this ever since.
Yeah,
that proves what I'm saying. It was not. If you let it be free floating, nobody wants to trade in that other currency. Everybody wants the dollar. As bad as the dollar is, David's right. It is the worst affected leper in the leper colony. This is why you have to have, if you're going to be intellectually honest, just have a relative conversation about all of the currencies and all the things that they're also going through, which are also not perfect.
The debt payments for the emerging and the frontier markets are extraordinary.
Just realize that if you want to go and peg your economy to somebody else's back, they also come with their own trials and tribulations that you have to risk manage as well. And now you have to decide on balance, do you want to risk manage a centrally governed economy, right, from a central bureau, or a freewheeling democratic?
Chamath, any thoughts here on our way out?
I'm going to take the complete opposite of all of this, which is the anti-Chicken Little version, which is I think not much at all changes. I think that debt to GDP will continue to rise, not just for us, but for every other country in the world whose fate is worse than the United States. And I think that on a relative basis, the United States will continue to be exceptional, and that this will not really be an issue in our lifetimes.
Okay.
And I'm not saying that's a good thing, and I'm not saying that's a just thing, and I'm not saying that's what I want to happen, but pragmatically, I think that that's what will happen. And I don't think that there is a magic number where all of a sudden things start to break, where there's some magic number for debt to GDP, where all of a sudden everybody finds religion. Instead, I think that it just creeps higher. And by the way, if you look at where debt to GDP was at the turn of the 19th century, and then what happened through to World War II, what we've really done is, we've retraced a lot as well. So there have been moments where we've been out over our ski tips a lot. And so I think it's just important to keep in mind that sometimes what works just continues to work. And I keep asking myself the relative question, which is what country, what economy, what group of human capital is better positioned than the United States? And despite all of the things that are screwed up with this country, it's hard to find a better example. If you look at Norway, Saudi, Abu Dhabi, what are those countries effectively becoming by monetizing the oil? They invest in all of the economies that are working.
Perfect segue. Thank you.
It's not as if the Saudis and Abu Dhabi and the Norwegians aren't trying to invest in America. They're trying to put as much money to work as possible. They're just trying to pace it out so that they have time diversity and asset diversity. So to your point, Jason, it's sort of a bit of a self-fulfilling prophecy. I think that what has worked continues to work, and then the burden for disruption gets higher and higher.
Two separate issues. Any surprises here by Saudi, the kingdom, actually releasing the list of who they're backing, and why would they do that at this point in time? And then us investing in China, because we are at a moment here, a crossroads, I think, of should we be engaging or not engaging and building bridges with China and Saudi, for obvious reasons.
Look, Saudi Arabia, Abu Dhabi, all of the UAE, these are countries that are really important on the world stage, and increasingly so because they manage peace and prosperity regionally now, right? They have huge balance sheets that can accelerate all kinds of projects all around the world. And so they have to be taken seriously. And so this is a very smart marketing move by the PIF, which is to essentially say, look, we are an established blue chip LP of the blue chip organizations that you're used to hearing about and celebrating. And I think that's very smart of them, because what it does is it reinforces the feedback loop that other great firms should be going to them to raise capital when it comes time for them to raise their N plus first fund. And so I suspect, especially now, it makes even more sense because everything we've heard, Friedberg mentioned it a couple of episodes ago, the United States limited partner market is essentially closed for business. They have huge misallocation problems. The endowments are sort of closed. The universities are closed. A lot of the family offices are licking their wounds. And so this is a perfect time for folks in Saudi Arabia and the UAE to basically put the foot on the gas and basically tell everybody, hey, we are open for business. So I think that makes a lot of sense. And I think that it'll be successful. It'll work, especially in a moment now where US dollar flows from US dollar limited partners are very difficult and harder to come by.
Well, and we're also selling billions of dollars in weapons to the kingdom. And we are a major partner of theirs.
They're a valuable security partner of the United States. They're a valuable economic partner of the United States. It's no different than doing business with any other country. I think it's smart by the PIF. On the other thing, though, with U.S. firms investing in China's AI, it should not be allowed. And I do think that the folks that are responsible for CFIUS need to get a handle on this. Look, I've done a bunch of deals where I have had to jump through a bunch of CFIUS hoops where...
Explain CFIUS, please.
So basically, CFIUS is the Committee on Foreign Investment in the United States. Now, what that means is if folks want to invest in certain things that are on a list of things, and I'll tell you the things that I've been involved with that came under CFIUS, rocketry and certain chip technologies are so advanced that the United States has very specific rules that limit the ability for foreign actors to invest in those businesses. And in those situations where a few folks invested beside me in some of these companies, we had to go through a process to get CFIUS approval before that investment was allowed. Now, what's interesting about that is that's about money coming in. But I do think that the reverse now becomes important, because if US dollars are going to go and seed these extremely complicated advanced technologies abroad, especially into the hands of countries that are frenemies at best of the United States, I think we have a responsibility to have a point of view on that. And so I think Keith Raboy was the one that was very definitive and said this should not be allowed. I do think it is so early. Jason, we talked about this. We're on this curve of fuck around and find out, which means there will be some crazy examples of stuff that are very uncomfortable.
Yep.
I don't think we want US fingerprints on this stuff being perfected outside of US borders.